What's up, you guys? It's Paul here from the 9 to 5 Investors Club channel. I wanted to make a very quick video for you guys here today on a Sunday evening on how I'm currently trading in the market right now. There's just so much uncertainty with elections coming up, with news about lockdown all over in Europe. Even the UK actually announced a 4-week lockdown over the next couple of days, and it's kind of getting pretty antsy out there in terms of whether those lockdowns will even come here in the US. And we know exactly what happened last time in March when a lockdown was announced as well. So that's something that we need to keep an eye out for. If it were a typical election year, a lot of this uncertainty we'd be out of this uncertainty after elections. But with COVID cases rising and with us not knowing about any stimulus package yet, there's just too much uncertainty to make predictions ahead of time. So that's exactly why I'm a little hesitant to just buy puts or calls at this point. And the best way I'm trying to trade right now is through spreads. Okay, so in this case I have SPY here, which is the S&P 500 index, and I have a couple of support and resistance lines here, but a lot of it fell through, and the only recent support where it bounced off of on Friday was this line here at 322.60 approximately, which was exactly where it corrected down to in September. Okay, now it looks like it's all the way only up till here, but if you look at it on a daily chart, it just about bounced off of the support line and started going back up. We would still have to see how it's going to work out once we open trading on Monday again, especially after elections. But in terms of support lines, that's mainly what I'm looking at for, to see if 322 can still hold off as a support and if it can go back up. Or if not, what I'm looking at is a very strong support on the 200-day moving average, which is at 312.50. Okay, now if there's any catalyst that can push it below that, it's potentially a lockdown situation. Okay, I think elections are kind of priced in. There still might be a little bit of a downward move after elections, just because people are still trying to kind of get a feel for how the markets are going to behave after, whether it's Biden wins the elections or whether it's Trump. So there's still going to be some volatility, in my opinion, for at least a week or two. But anything that can push it below the 200-day moving average, in my opinion, would be a potential lockdown situation. Okay, so the way I'm trading right now is to just buy put credit spreads or call credit spreads, or sometimes just combining them into iron condors. So here I sold this put credit spread here with a short position at 312.50, which is exactly the 200-day moving average like I was just showing you. For 10 of these I got a credit of $500, and as long as SPY stays about 312.50 by November 6th, I'll get to keep the full $500 credit. Okay, so far it's doing pretty decently, but if ideally, even if it drops down to 313, this is still okay, and that's exactly why you'd want to put your short put so much lower, so that you're actually giving SPY more room to fall during the volatility and before expiration. Okay, one other trade that I have here is a put credit spread where I bought the 315 put and sold the 317 put. Now this earlier was actually a 318 put and a 320 put as part of an iron condor. And that was slightly below the support line that I saw here, but I was getting a little nervous when SPY kept falling so much on Friday. So what I actually did was I went and adjusted it here. So as you can see, I bought back the 320 put and sold the 318 put to close the initial put credit spread, and then simultaneously I bought the 315 put and sold the 317 put for a total cost of just $99. Okay, and now my average credit for this put credit spread is about $61, or about $547 for 9 of these put credit spreads. And that's exactly what I'm holding right now. Okay, so as long as SPY stays above 317 by November 6th, I'll get to keep the full credit. But in case it still keeps dropping, I'll probably adjust this more, which will reduce the initial credit that I get, but it'll make sure that I avoid losses. On the call side, what I did here was I actually got the 360 call and sold the 358 call, because 358 was the all-time high for SPY. Okay, so in this case, again, for 9 of these call credit spreads, I collected an average credit of $23, or a total of about $207 for 9 of these. And yeah, they're pretty much going to expire worthless, since there's no way SPY is going to get back to all-time highs in the next 1 week. So this is going to be a full 100% profit, where I'll get to keep the full credit. Okay, so if you want to be more aggressive and get more credit on it, you could potentially lower your short position, where you could get the 350 call and sell a 348 call, for example. But as of now, the credit for all of it on the call side is really cheap. But again, a combination of put credit spreads and call credit spreads, in my opinion, are the best way to handle the market right now. It's very tempting to buy puts or calls in UVXY, for example, but I think if you're too premature on getting into those, you could potentially get burned. and that's exactly why spreads are a safer bet. Okay, a couple of other stocks that I've been watching as well is Microsoft here. Microsoft got very close to 200, which is one of the support lines that I have here. If Microsoft can trade in this channel here between 224 and 200, an iron condor on it between here is a pretty good trade in my opinion. If it falls below 200, we may go all the way down to 190 here, but that's something that I'm definitely keeping an eye out for. When it comes to Apple, what I'm doing here is the levels that I'm watching here are, again, the 100-day moving average is at 108. It got very close to it on Friday. Below that is the 200-day moving average down to 90. I highly doubt it'll go all the way down to 90 again, but that's definitely something that I'm watching out for. Another stock that I've been watching here is also Facebook. Facebook dropped a lot on Friday, but again, they're very, very close to the 50-day moving average. Not too much of a downtrend yet, but I'll be looking to see if they can stay about 256 or even more safe to be around 250. So I'd like to, if I buy any put spreads, I will likely put the short position around 245 or so is what I'm looking at right now. But so again, guys, I mean, the main reason I'm making this video is that I think spreads are the best way to go right now during this volatile times. There's just so much uncertainty. I don't want to jump the gun too early and buy puts because SPY might drop even more, or buy calls because it already dropped so much on Friday. I think that's just, if you're too early, I'd rather be, something I always tell my group is I'd rather be a little late and correct than too early and wrong. Okay, so and that's something that I want to make sure I made it clear to you guys as well. Okay, so I hope that helps you guys out in terms of how I'm trading in the market right now during this volatility. If you did, please just smash that like button and leave a comment below if you have any questions, and subscribe if you haven't already, and hit that notification bell. Okay, thanks again for watching, and until next time.